Hello and good day, everyone. We are pleased to welcome Ananta Krishnan Govindan, partner in audit and assurance at MSKA and Associates, to help us navigate the regulatory landscape through his session today on related party transactions on Insync with BDO India. Thank you for joining us, Ananta. Over to you for your valuable insights.
Thank you, Rajdeep. We intend to take you through the SEBI updates on related party transactions in this session. So, related party transactions, because of their structure, because of the requirement in business, they are both inevitable and are also complicated. And our experience has shown that these are prone to abuse, conflict of interest, and many of the cases, several corporate failures. The root cause of that is related party transactions, and rightly so. This is the focus area for SEBI and NFRA at this point in time. So, what is the present landscape on the approval of related party transactions? So, the SEBI LODR requires prior approval for the related party transactions from the audit committee, and in case they are material RPTs, then it requires approval from shareholders as well. If you look at the master circular issued by SEBI in November 24, the information to be placed before the audit committee for the approval is broad based, and there was no format prescribed for the kind of information that is to be supplied to the audit committee. So probably this was hindering the objective decision making. Now, what is the new standard or the revised industry standard on related party transaction notified by SEBI states? Point number one here is this was developed by SEBI-led Industry Standards Forum, and this has the same authority equivalent to a SEBI circular. So this fundamentally discusses with on one section about the approval required from the audit committee and what is the minimum information that needs to be provided to the audit committee. On the other side, it deals with the approval required from the shareholders and what is the minimum information that needs to be provided to the shareholders. And in the audit committee part, there are three parts: part A, B, part B, and part C, which deal with certain basic information required, certain additional disclosures which are to be given based on certain categories of related party transactions, and certain granular information in respect of material RPT transactions. So let us go into these parts one after the other. Before we get into the part A, B, and C of the minimum information to be provided to the audit committee, certain fundamentals here. The information to be provided to the audit committee must be in the prescribed format today. Even so much so that non-applicable, answering a field as not applicable should also have an appropriate reason for that. The next part is that the terms of the RPT are in the interest of the company, interest of the listed entity. The CEO, MD, full-time director, manager, and CFO have to certify, and that certificate should be given to the audit committee. In case evaluation report or other any other external report is present in the case for the purpose of decision making, then that copy of that one should be made available, and all the information relating to the related party must be based on the previous financial year audited financial statements of the previous financial year. In case not, then certified extract must be provided. And if the related party is following a financial year, follows a different financial year, then that must be explicitly disclosed. In case of multiple RPTs, these information have to be provided for each type of RPT. Let us get into the information that needs to be supplied to the audit committee now. Part A, which consists of the basic information. This provides for the total value of the RPTs undertaken for the previous financial year as well as the current financial year. Then, in case the related party has defaulted in any of its obligations in the last during the last financial year, that fact should be brought in. And in case of multiple RPTs, estimated financial year wise breakup of the related party transactions should be captured here. And the direct or indirect interest of promoters, directors, and key managerial personnel should also be brought in. And a copy of the valuation report or other external report, if available, should also be forming part of the minimum information. This is the basic requirement. Now, if we move on to category B, then there are 7 specified categories which are covered here. The first one is about sale, purchase, or supply of goods and services. In this case, how is the related party selected? Then basis for determining the transaction price. And in case there are trade advances, what is the amount of advance, what is the tenure of the advance, and whether the advance is self-liquidating or not must be provided as a minimum set of information to the audit committee. Now, coming to the second category under Part B, which deals with the loans and advances and ICDs, what is the source of funds? And then whether a financial indebtedness has been incurred by the listed entity. In such a case, then what is the nature of such indebtedness? Then what is the entity's borrowing rate to be charged to the related party, and then the purpose of utilization by the ultimate beneficiary, that should be brought up. And if this item is material, then further disclosures are also required for the last 3 financial years, which include default on the borrowings and the value of any subsisting default, whether the related party has been classified as a non-performing asset, willful defaulter, or it is subject to the insolvency proceedings. Then these will also form part of the minimum information. Now, the third category in Part B deals with the investments by the listed entity or subsidiary. Here again, the minimum information should be the source of funds, the financial indebtedness incurred, purpose of utilization by the investee company, and what are all the material terms here. And if these are material transactions, then our last available credit rating of the investee company, whether any of the regulatory approvals are required for the investment, should also form part of the minimum information required. Now, fourth category under Part B deals with the guarantee and comfort letters. Here, the minimum set of information will be the rationale for issuing of the guarantee or the comfort letter, and is there a binding legal obligation on the listed entity? What are all the key covenants and the value of obligation, and any provision has been made or not? And if again, if these are material, then in the last 3 years, what is the solvency status? Then default on borrowings and value of outstanding defaults, status of NPA willful defaulter, or whether the related party is under IBC proceeding should also be forming part of this minimum set of information. Now, category 5 of Part B deals with the borrowings by the listed entity or subsidiary. Here again, the minimum information is material covenants, interest rates, the borrowing cost, purpose of utilization, and if these transactions are material, then before and after the transaction, what is the debt equity as well as the debt coverage ratio based on the latest financial statement should be provided for here. Sixth category prescribed under Part B is sale and disposal of assets and the like. Here, the minimum set of information will be what is the basis of price, financial performance over the last 3 financial years, anticipated impact on turnover, net worth, and net profits. And if this transaction is material, then what details of similar transactions which have taken place in the last 12 months, relevant disclosure if it if it involves issuance of securities or consideration in kind, then whether it results in the elimination of any segment reporting done by the parent entity, and key non-financial rationale, if any, should also be provided as part of minimum information. And the last category, the seventh one under Part B, is about payment of royalty. Here the minimum set of information will be purpose of royalty, and is this rate uniformly applied across the group? If not, what is the minimum maximum royalty rate in other jurisdictions should be brought out, and if there is any sunset clause or not. that information. Then, if again this is material, for the last three financial years, what is the royalty paid, its purpose, and royalty as a percentage of the net profits, and any peer benchmarking or comparison available in respect of this transaction should also be brought in. Right. That concludes the minimum set of information to be provided to the audit committee for the purpose of approval under part A, B, and C of the requirement. Now we move on to the second section, that is the approval required as well as from shareholders and the minimum set of information to be given to them. So this is very interesting. If you look at the information placed before the audit committee as per the formats prescribed by the industry standard should go to the shareholders here. So whatever is being discussed on which based on which the decisions are taken with the at the audit committee level, those information flow to the shareholders for the purpose of their decision making. In addition to this, there must be a justification as to why the RPT is in the interest of the listed company. That must be provided by the management. And in respect of the certificates and other certificates which were provided by the CEO, MD, full-time directors, and CFO, as per the RPT standards, must be disclosed and here whether they have been reviewed by the audit committee. The fact should be mentioned over here. And in respect of material RPTs as well as their modification, the statement has to be made whether the audit committee has approved it and the board has recommended this for shareholders' consideration. And in case of valuation and other reports considered by the audit committee, a web link or QR code must be provided, and it must be affirmed that this forms the necessary information for informed decision making. So these are the minimum information that needs to be provided to the shareholders for their decision making, and this obviously flows from the information which is presented to the audit committee for their decision making. Now, as we know, this revised RPT standard is applicable from 1st of September 2025, and it also provides that the previous approvals will be valid. So we have just put a columnar, bifurcation of this for the purpose of understanding as to which will be applicable, where it will be applicable, where new standard is not applicable. Here, if you look at, if the audit committee's approval is available before 1st of September 25, shareholder has also approved before 1st of September, then the RPT transactions are executed after 1st of September 25, then the related party transaction standard is not applicable. And in case the audit committee approval is before 1st of September, but both the shareholder approval as well as the execution happens after 1st of September, still again, the new standards are not applicable. And when everything, the audit committee approval, shareholder approval, and the execution happens post 1st of September 2025, the related party transactions are triggered here. So if we look at the set of information that are required to be supplied to the audit committee as well as the shareholders, when we look at the standard, so certain questions come to our mind, very fundamental questions. So what we have tried to do here is to give our first impressions on these questions so that the matter can be looked into in a proper perspective. So now, for what the audit committee approval is required, it is for all sorts of RPT transactions, in the sense whether it is a specific approval, it is an omnibus approval, or it is a significant transaction of subsidiaries approval. So it is applicable for all categories here. Now, if we recollect what we were discussing earlier, the standard is quite clear that the transactions have been specified and the minimum information to be supplied in respect of the transactions have to be given for each and every category of transactions separately, every set of transactions separately. These cannot be aggregated and given in bulk or in one go so that the audit committee approval can be taken over here. So that is not permitted going forward. Now, the KMPs have to make a certification to the audit committee saying that these RPT transactions are in the interest of the company. Can they, audit committee approve it without the certification? Your understanding that is unlikely. And when the audit committee considers the information that has been provided to them for the purpose of decision, do they have to make any comment on that? Do they have to provide any specific remarks on a mandatory basis? In our understanding, no. But if they have not approved any RPT transaction, then probably the rationale must be recorded in the minutes. So in case of trade advances, if the trade advances are in the nature of loan, detailed disclosures are required. And the RPT standard also requires now that the ultimate beneficiary, what is the purpose of the loan or other money is given to them and how they are being utilized by them, the ultimate, the end use of the loan must be clearly specified in the papers filed before the audit committee. And then in case of subsisting defaults or categorization of the related party as NPA and so on must be brought before the audit committee. And in case of comfort letters, if they give rise to a legal obligation in to pay in the case of default, disclosures are required there as well. So that brings us to the end of this session, and the regulator, by detailing the information that needs to be provided as a minimum set of information to be given to the audit committee, and thereby also to the shareholders for the purpose of the decision making, they have very clearly indicated that the game on corporate governance relating to the related party transactions have been upped here. So it is in our view right time for the managements companies to look into the processes around related party transactions, the way in which these information are collated and presented to the audit committee. So thank you very much for listening to this session. And in case you have any questions, please do reach out to us, and then we will be very happy to help you out. Thank you very much.